Guys, welcome back to my channel. Today I thought of uploading an educational video about how you can take intraday trades. I selected Bank Nifty to explain this concept to you guys. Yesterday was a budget day, and Bank Nifty has moved like more than 8%, which is kind of extraordinary. And what happens during this, after these extraordinary moves is the market tries to cool off a bit. And I wasn't expecting a bear bar. I was bullish on the market, but I wanted to take an intraday position when there has been some decent retracement during the day and go long in Bank Nifty. That was my view basically. Okay, and I just launched a Telegram channel, very recent one, so I just posted an image about when I was about to take the trade. Obviously I couldn't make live videos as such while I am in the trade and taking trades, and I have to make so many decisions during the trade and after the trade, so I won't be able to make a live trade as such. But I wanted you to definitely make an educational video about what was the analysis behind taking that trade. This was the image I posted and said I'm bullish on Bank Nifty, and as you can see, and that time was somewhere here, I guess, and the market was around here. And I'm going to explain you the reason behind identifying that area or that place as a good entry for long positions. Okay, and as you can see here, the market opened the gap up, okay, and then started cooling off a bit like this and went up, and it moved in a wave. And this is where I posted a video that I am interested in going long and I'm expecting a up move. So that's what I posted in the image, as you can see here. So that was around 12:45, I guess. So the reason behind going long around that zone and is because I'm going to explain the concept. It's a pure price action. As you can see, I don't use any indicators. It's a pure intraday price action analysis that I do. As you know, the price moves in waves. We all know that, right? There was a big wave here, and then sellers came in, and then buyers tried to take the market up. Sellers came in stronger. Buyers also were quite decent in taking the prices higher. The bears took the prices further lower, forming a lower low and also a lower high. And then bulls came in here, and then bears got in here. So the reason why I thought like this could be the time, a good time to take long position, is because, see, if you assess each of these legs, this was a very strong bull move, right? So there is no ambiguity about that. And now if you look at the bear leg here, so today that's where the downside movement started. Bears brought the prices down. There was quite a fair bit, and then the bulls, they just had one big bull bar, and then they failed to capitalize on that bull bar, and then bears got into the market and started selling. So you could say it's bears who brought the prices down, or the bulls booking profits. Both, either way, it doesn't matter. Okay, this leg was pretty stronger, right? When you compare, I'll just clear off the drawings here. Okay, so when you compare this bear leg, right, this bear leg with the previous bear leg, right, you can see that bears are stronger, right? Similarly, when you compare this bull leg, right, with this bull leg, it's just only one bar, but anyway, it's just another leg, so it's weaker compared to the previous one, right? That's a very simple concept. Okay, that's all I use. You have to keep it very simple. The analysis should be very simple and very clear as well. Okay, that's the key thing here. And the next bull leg was stronger than this previous leg, right? And you see, this is the interesting part. And the next bear leg is weaker, right? It's weaker compared to the previous bear leg, which is this one, right? It is weaker compared to the previous one. So what are we understanding here? Bulls are getting slightly stronger and bears are getting slightly weaker. And then the story continues, right? Here comes the bull leg, which is again stronger than this previous bull leg. Okay, you can argue, I mean, it's not that strong. Yes, of course it's not that strong, but I would say it is slightly stronger than the previous one. Okay, we got nice good trending bars, trending bull bars, and so I would say slightly stronger than the previous one. Next wave is about the bears. If you see here, the bears are getting weaker compared to this previous one. So what are we observing here? Bulls are getting stronger, as the wave progresses, and the bears are getting weaker. And that's where we come into picture and then take the trades. That was my assessment basically, and I always go with, I have got two kinds of strategies. I will explain the entry strategies and the exit strategies basically in future videos, because explaining that would involve you prepping up with some other concepts as well before getting into that. All I want to tell you in this video is how price action actually works and how you can precisely time your entries and exits basically, or at least identify the zones or identify what the market is saying. What you call is like feeling the market pulse. This is what it is all about, and I hope you will get that concept clear in this video. If you don't understand straight away, just rewatch the video and I'm sure you will be able to understand this. All this concept involves is bears getting weaker, bulls getting stronger. The overall view of the market is bullish and I wanted to go long. I didn't want to short. That's all. That's all is involved. And identify the place where bears were weak and I just enter the trade here. As I said, I have got two kinds of entry strategies. One is like 1:3 risk to reward ratio, and the other one is 1:2 risk to reward ratio. On this occasion I took 1:3 risk to reward ratio, and don't worry about the trades and stuff, you just understand the concept. Okay, if you identify where to enter, this is a zone basically, so and then you just have to pinpoint the entry timing, that's all. But you know the concept now, like how it works. So if I clear out all the drawing tools here and show you once again, there was a up move and then a bit of correction and then a small bull wave and then a nice retracement which I was anticipating, and then a stronger bull wave, slightly weaker compared to the previous weaker bear wave, and then a stronger bull wave compared with the previous bull wave, a much weaker bear wave, and this prompted me to take the entry right above the high of this last bear bar, the tiny bear bar, and my stop loss was just below that swing low, which is somewhere around here. Okay, that was my stop loss, and I went with 1:3 risk to reward ratio, which got achieved quite easily. So this was the concept I wanted you to understand. Price moves in waves. You just have to understand who is stronger and who is weaker, and has there been any change in the pattern. Change in the pattern is what I mean by that is the bulls were stronger in this leg and then they got weaker. That shows bears are getting into the market. So, and then bears got stronger and later bulls got stronger. That is all you have to do. It's just only bulls and bears in the market, no one else. So you just have to identify who got the strength. So based on the strength analysis, the bull bear strength analysis, I took the trade. This concept I think is pretty clear and I hope you understand this. And as I said, I posted this image, sorry, not that one, posted that image, and this is also Axis Bank I was looking, which was pretty much like similar to the Bank Nifty as well, but it didn't trigger the entry here basically, and I was already in position in Bank Nifty, so I didn't really take the trade, so that's why I didn't post this one. I normally post the trades I take, and if there has been a very good tradable opportunity. So that's what it is about. I hope you got all these things, all the concepts clear, and I will explain you about the entry and exit strategies in my future videos. If you like this video, please like, share and subscribe if you haven't done it, and share with your friends as well, guys. I'll see you around in the next video. Thank you, guys.